Hello out there and good morning traders. It is June 13th, 2024 and welcome to the Apteros Daily Market Insight. Let's dive in here a little bit. Unfortunately, I had made a mistake this morning. I forgot to get a screen capture of yesterday's levels so we could do the recap properly. But there wasn't really much to go over here. We were bullish in general, but essentially we were out here where the risk reward landscape just wasn't that good. And there was nothing for us really to do out here besides wait for a pullback in the classical DMI sense. We never really got that pullback. There were just a couple of neutral levels kind of out here in these zones, which turned out that we built value in between that over yesterday's session. So we ended up going rotational in yesterday's session without really seeing any kind of real control for the bears. So the bulls maintained that control with opportunities from neutral areas if you were, scalping or whatever, but they weren't really aligned with what we were looking at with the DMI. The DMI was something more or less looking for a deeper pullback into an area that we wanted to see hold. And if you were a student of NADRO, you should have seen that hold based on what we were talking about yesterday in the DMI in that zone here. The reference, is dynamic. It moves. So it kind of moved up in the morning all the way up into this area here. And that was really what we were looking for as the main plan. So just a heads up there for students who are paying attention to these. But anybody else, there wasn't really a good pullback into our line in the sand area, so not much for us in terms of a recap. Now, taking a look at what's going on today, so moving forward here, we have some neutral references, things that we've been tagged, but we are still generally bullish. Once again, our big issue, our big problem is that the risk-reward landscape on the higher time frames is just not there. So this environment isn't the best in the world for being bullish because we're looking at areas where on the higher time frames, we just don't have a lot of room to the upside to continue to run. Now, that's our analysis. That's not a prediction. That's an important distinction there. It's just the way in which the narrative component of NADRO works and understanding how these references react, move, and change. So one of the biggest phrases that we use is trade what is, right? The what is picture is still bullish. We're just aware and cognizant that we're out in a difficult risk reward landscape to continue to stay bullish. We're asking this market to continue to give us energy to the upside, to continue to press those kind of things. So with that in mind, taking a look at what's going on today, let me kind of shuffle this over for us so we can kind of break it down a little bit more clearly. But what's kind of going on today is that we have, like I said, a generally bullish environment with the main line of the sand kind of being here, right? This is our main line in the sand for the session in the early part of the session, especially the morning. Scenario one being a hold up above this area here, and that would be our first target area. If we get a continuation, that would be a more bullish environment in general. So we'd probably be looking for a stretch target out into this zone here. But beyond that, there's really nothing else out there for us to target. So this is what I mean by the risk reward landscape. Coming up into today, we had higher time frame targets that were well above the market that we could have used in case the market was really bullish. Well, yesterday, those areas were hit and those areas were held and they weren't really pushed through. So at this point, we're running out of overhead targeting, which gives us a good concrete and objective way to say, yeah, the risk reward landscape is starting to run out to the upside. Once again, analysis, not a prediction. This market could easily just run out into 6,000 for all I know, right? It doesn't really matter. I'm just consistently applying our narrative framework each day, right? So at this point, scenario one is a continuation of the upside, looking for this target first and then this target second. At that point, if we end up seeing a breakdown with scenario two, that would be a dissonant environment for us. The reason why is because our next time frame in play really is down here, and that is bullish in nature as well. However, there is room to capitalize on some shifting time frames coming from this line in the sand. So scenario two isn't as confluent, let's say, across the board as scenario one is, but scenario two is that first indication that bears have some control in the short term. And this opportunity here is a little bit more of a scalp level opportunity, but an opportunity nonetheless to the downside. And, probably looking for it to clear below here to get to that full target area, which would be down below. And then, of course, like our main line in the sand up above, this one would operate the same way. We'd be looking for holds as a scenario and a breakdown as another scenario. If we get that full breakdown, for whatever reason, the bears really get control of today, these two neutral references are kind of the bigger stretch targets down below for the bears. For the bulls, as you can see, the targeting becomes thinner as you go higher. So just keep that in mind if the market continues to rally or continue to move upward. All right. So trade well out there. Mind your risk. I apologize for not having the full recap today, but there wasn't much to recap besides some bouncing around between some neutral levels.